Hey everyone, welcome to another video on the channel. Today we're going to take another look at Zim Integrated Shipping Services Company, also known by the ticker symbol ZIM, Z-I-M. So, since the last time we talked about Zim, we could see the price has continued to fall, although we could see on the chart at the very end of September and now coming into October, we could potentially be finding some support around the $24 to $25 level. We'll be tuned in to see if that support level holds and potentially forms the basis, so we could potentially see a bounce. But the stock price has just been going down, down, down for the past months. Now, why is this, and will it continue to go down? Well, we have to ask ourselves a few questions. So in terms of why the price has been going down, there's a few factors. This is definitely one of them. The fact that there is not as much demand for goods being manufactured in China. And so this chart shows it right here, the shipping rates from Shanghai to all these places, LA, Rotterdam, New York. It's all going in one direction, and that's down, which of course is not good for a stock like Zim, which wants these high rates so it could make a ton of profits off of those high rates. Now, what is going to happen for the remainder of the year? It's October already, and typically this year was a bit different than most years, because usually we see a peak in the shipping prices in the second half of the year because of people are spending money for the holidays. So come Christmas, Thanksgiving, whatever, people are going to be spending money and buying these goods, and so these shipping rates should be going up in accordance with that. But this year we've seen the opposite. We saw the first half of the year shipping rates were quite high, and stocks like Zim were being able to bank off of that, whereas now they're receding. Now, another thing to keep in mind with this is that Zim, like these other shipping companies, has a lot of their business based on contracts that they have, as opposed to spot rates that people who need the shipping services could just buy their services off the spot market, but they could also enter into these longer term contracts. So what's been happening in that regard? I thought this was interesting. Let's come back to this. So, a lot of these companies find they're putting pressure to enter into these long-term contracts, or they have, and now their clients are pushing back, trying to kind of renegotiate with those rates. So this article is saying that 50% of these clients have successfully negotiated for lower rates on their contracts, which isn't that good for us, although, even if they're renegotiating, they're still going to be higher than what they would have paid if they had just paid for it on the spot market. And the more they have locked in, the more contracts they've locked in at these higher prices, they can only renegotiate so much. And so here, for instance, Maersk, which we'll talk about too in a second, they have about 72% of its long haul volume on contracts. So, okay, that's pretty good. So that should give them some sort of protection for falling shipping rates, because they're locked in. Now, what else is going on? Again, I sound like a dead record, beaten horse, whatever the expression is, not to beat a dead horse, but the fall has been much steeper than I think anyone, even the analysts, were really expecting. And I've put up that Freightos chart before. We just saw a little bit of a similar chart in that last article, but the fall is pretty steep indeed. Now, here it is again. Here's that Freightos Baltic Daily Index. So you could see, my gosh, it was up to $5,000 last April. Now, coming to October, it's less than 4,000. It just keeps on going down. But what is worth noting, and what I've said before, I'll say again, even though it's gone down, it's still so much higher than if you go back to like 2019, it was like $1,200. Today, it's just below $4,000. It's still 3x of what it was. And the question is, where does it bottom? Now, I don't have the answer to that, but you know what? I mean, it's gonna bottom somewhere, and that is gonna be the real key to see. This is interesting. Zim said its contracts rates this year were double of 2021's. So think about that for a second. Its rates are double than last year, and last year is when we began to have that massive upswing in rates, and also the stock started to take off towards the end of last year, or at least it was starting to gain momentum for its big run earlier this year. Its rates are, double from that. So even if they're, as we're saying, renegotiating some of those rates, they're still making boatloads of money. Boatloads of money. Now, I want to talk about something else. I thought this was really interesting, this article, because there's that old expression, when in doubt, zoom out. And so I could imagine a lot of people are looking at Zim saying, like, what gives? Why is Zim being hammered so much? Are we going to enter a depression and people are going to stop buying goods from China or whatnot? Let's do a little compare contrast. Now, it's not the same business or anything, but I like the fact that this article, I thought this was worth mentioning. So it's comparing Zim, which, as it says, it's delivering these big profits, it's paying out this enormous dividend, etc., as we already know. Now, compare it to a stock like Tesla, which has not as high profits, no dividend, and it's trading at a PE of 106. Meanwhile, Zim is trading at a PE of only 0.6, which this article is from a week or two ago. It's like 0.5 or maybe even 0.4 at this point. So, I mean, it just shows you how, the market has its own will and will bend any stock to that will. And we, the retail investors, are kind of just being tossed around. Now, in time, this will come back. In time, the actual profitability and all that stuff will matter, and Zim should be rewarded if it keeps its profitability up. But when you look at on a short-term basis, those factors don't matter. It's all sentiment, or so often sentiment is just what kind of drives everything. Now, I mean, and again, here we go. So Zim is giving all this money to investors, returning around 30% of profits to them. That's pretty good. I mean, Zim is just going to keep on paying its shareholders. And this was so funny, this comparison to Tesla again. So Tesla's net margins, 13.3%. Zim, 39%. Okay, Tesla's return on equity, 31%. Zim's 178%, and as we said, the PE is 109 to 0.63, which, as I'm saying, I think it's like 0.5 at this point. Just to put things in perspective. Now, another thing, I've talked about this chart in a previous video, but I wanted to bring it up again. This chart right here is showing the average revenue per TEU, which is how much money the company's making per 20-foot container on their ships. And so you could see Zim is this yellow line. So Zim, beginning at least in Q3 of 2021, was far outpacing its competitors, far outpacing them. Now, how have their competitors been doing? It's a good question. So I showed you that chart a second ago of Zim. Now, let's look at, that blue line is Maersk. Well, how has Maersk been doing? We could see Maersk over here. Now, Maersk has also been, let me expand that, not been doing the best, but we could see from around August when it was, hitting that nice little mini peak there, it was about $14 to today, it's about $10. I mean, it's gone down 28%. Now, that's not really ideal, but how has Zim done? Zim in that same time frame has gone down about, let's see, from August to $52, let's say, to $26. It's gone down about 52%. Now, think about that for a second. Considering the fact that Zim is making more money per TEU, substantially more, and yet their stock price is down 52%, but Maersk is only down 28%. How could this be? Well, there's a few things. One of them, and keep this in mind, is that Maersk isn't paying its shareholders nearly as much. The last dividend it paid was in April for $1.30, which is 13.73% return annually. Zim paid in August, or I guess it paid in September, declared in August, $4.75 in dividends per share, which is over 80% return. So, I mean, we're talking apples and oranges here in terms of, yeah, the stock price has been punished a lot more on Zim compared to a company like Maersk, but Maersk is not paying nearly as much as Zim is to its shareholders to hold on to that stock. So, and here's the other thing. We said in that last article that Maersk had about 70% of its stocks, of its ships were chartered into. Zim, it's 94% of their vessels are chartered, which that's great. That's going to hold them up when the spot rates go down. They're locked into these charters, which again, I'm not trying to, contradict myself. We said that about 50% or so of these clients are renegotiating, but how much could they possibly renegotiate? They can't renegotiate them below the current spot rates, which are falling to nothing. They're going to find some middle ground between what they've fallen to and what they originally entered into. So it's still going to be a highly profitable contract for Zim. And so just keep it in mind. And again, the CEO has said that they reaffirm their full year guidance for 2022 and are on track to deliver another year of record earnings and profitability. And they also announced, we already knew this, but their dividend payout they raised from 20 to 30% of quarterly net income. So I know Zim has been plummeting lately. I know a lot of people have probably given up hope on Zim, and I'm not saying you should or shouldn't, because there definitely are some risks to Zim, which we've talked about in the past concerning we don't know what's going to happen with the global economy. Maybe we will enter a recession or worse, or maybe we're already there and people are going to stop spending money. Maybe, there will be more lockdowns in China and that's going to disrupt shipping. Could be. I mean, we've seen that the port congestion issues have calmed down a lot. We've seen that inflation has just been crushing people, understandably so. So people aren't going to be spending money buying products from China that Zim is going to ship over. They're just going to struggle to pay rent and pay gas and buy food. So something else to keep in mind. But I'm going to be really curious to see if the price recovers going into the holiday season, because that's when people should be spending money. That's when people should be ordering this stuff over from overseas, all these products and whatnot. So something to keep an eye out. In the meantime, we're kind of in a bit of a no man's land to see how the economy is going to do and these other factors. I mean, there's so many geopolitical factors as well that could influence Zim stock price and the market stock price in general. But in any case, let me know what you think in the comments below. Do you think that Zim is going to recover? Do you think that their stock price is going to keep going down? Do you think it's going to even out where it is? I'm always curious to hear what your thoughts are. And let me know if there's any other stocks you want me to cover in the comments section. But, and again, I'm not a financial advisor. Do your own due diligence, make your own financial decisions. But let me know what you think about Zim, and I'll catch you in the next one.